We all make pricing decisions. We all price our products every single day, or our services for that matter. Do we ever think that pricing is more of a planned, informed activity? Have you ever given it a thought? Let's say what we normally do. We just take all our costs and have a thumb rule. I'm sure you can relate to this, right? How do we quote for a product or a service? We have some idea of costs, we have some back of the envelope calculations, and we add some percentage of profit to it. So that's our thumb rule. And then we come to the price. Then we go to the stage where the customer starts negotiating with it. That is also again a blanket discount. Okay, I'll give you a discount of 15%. He tells you, you match this price and you take this order. We just match the price. We see if, at least I am able to cover bare minimum of my costs and have some bit of profit. And then we give the price, right? So we price our products very casually. In a very casual manner, just on the back of the envelope calculations. There is a scientific, foolproof, and a very organized method of pricing, whether it is your product or whether it is your service. What we can actually look at is, there are certain elements which you need to consider very critically in pricing. And what are those elements? Those elements are whether you should consider all your costs or whether you should cover certain costs. Now this is a very tricky thing in pricing because most of us try and cover all costs for every order that we take. Is that necessary? No, it's not. So what do? There are certain costs which are your direct costs and there are certain costs which are your fixed costs. If you try and cover your fixed costs in every order, it's going to be difficult for you to meet the competitor's price. So what you need to do? You need to analyze which of your products are going to give you a decent amount of margin. Use those products to cover your fixed price. And what are those fixed costs? Fixed costs are nothing but, irrespective of whether or no you run any business operation, there are certain costs, like there is electricity, there is telephone, there is internet charges, there are salaries you need to pay to people. All these costs fall under the category of fixed costs. So to cover these, you have to be cautious. But there are some costs which you have to cover. And those are direct costs, like material. Suppose you get order which is beyond your capacity and you have to hire additional labor, of course that needs to be covered. So when you do this kind of a calculation on what I should cover and what I should not cover in my costs, you will come to a level where you arrive at a price which is a no nonsense price or a rock bottom price, which you can take the order and yet make profit. Mind you that many a times in pricing, what we forget is that if I go below this price, I am not going to make money. But if you use these parameters in pricing, you will realize that you can let go of some more sale price and grab that order. But for that, you need to be very, very clear on what your cost structure is. So what is it that we learn from this? We learned that cost needs to be analyzed and broken down into direct, indirect and fixed. Decision needs to be taken on whether I need to cover every cost in a particular order or I am good with covering only direct and indirect costs. I don't need to cover my fixed costs. This decision is very important and it comes through when you have proper information with you on your cost structure. So next time you tell your accountant to show accounts to you, instead ask him to categorize your costs into these segments. He will know it best. So coming back to what I said in the right first video, is that accounts and finance is nothing but a translation of your business in financial terms, in money terms. And I think over these videos, we have seen how each and every business aspect or each and every business operation kind of interlocks or interlinks with finance and accounts.